Hi, this is Mitch Messer, Senior Asset Manager for HomePride Properties here in Atlanta, Georgia. In the next few minutes, I'd like to talk a little bit about housing starts and what they can tell us about Atlanta real estate trends, particularly with respect to residential rental housing. But first, let's take a quick step back. In January 2012, we published a post on our website, ownerfinanceatlanta.com, describing what we're calling the new housing crisis. The post makes the point that there's currently a fundamental lack of rental housing in the Atlanta market. At the same time, we're seeing record numbers of families who need to rent. The post is there for those who want to read it, but I want to focus on one aspect of the data that was analyzed to come up with the conclusions that we did. And that data is housing starts. So let's take a look at the details of this posting. And right around the middle of the post, there is the link on Census Bureau data. So, a few of our clients have asked us for a more detailed review of this data, so let's dive in and see what we see. But first, let's talk terms. A housing start is when construction begins on a housing unit, which could be a single-family home or a multifamily building. Typically, that happens when the builder starts excavating, grading, and then pouring the foundation. And the Census Bureau gathers this data, massages it, and then presents it as this housing starts report. Let's take a look at the monthly seasonally adjusted housing starts. Now, if you look at the data for the southern region, you'll see that there's a huge run-up in construction around 2006 January. It's a 13-page report. We want page 11. So let me get down there and make this a bit bigger so that we can all see it. If you look at January 2006, you see we peak at around 1.146 million units starts. So the difference between the total starts, which is the 1.146, and the single unit starts is roughly equal to the multifamily unit starts. And that difference stays between about 150 to 200,000 multifamily units starting around 2000 up until around 2008. And then in 2008 it pretty much drops off a cliff and starts to hover around 50 to 100,000 units. What this tells us is that during the huge run-up of construction in 2004, 5, 6, 7, we didn't really see an increase in multifamily house construction. Not surprising. Builders were building single-family homes that they could sell and flip and then turn around and do the whole thing again. Multifamilies weren't moving because there was no need to rent. You could buy. But what that means is that the total number of rental units that were built during the housing bubble stayed mostly constant. And since the bubble burst, there's been a significant drop in multifamily units started. What this means, in our opinion, is that we're anticipating about a 2 to 5 year window during which rental supply is going to remain relatively low as builders get back in the game and start building again. Meanwhile, this low supply is going to have a positive impact on both rental rates, in other words, they're going up, and occupancy rates, which are also going to go up because you're going to have a relatively large group of people trying to compete for a relatively static and relatively small number of rental houses. And that's exactly what our investors and private lenders love to hear. So there's certainly plenty of data here. It's actually fascinating to look at numerically the run-up. I will state for the record that when we speak of the southern region, we're talking about Delaware, DC, Florida, Georgia, Maryland, North Carolina, South Carolina, Virginia, West Virginia, Alabama, Kentucky, Texas, Oklahoma, Louisiana, a huge number of states. So to have, for example, only 200,000 multifamily units created for that entire region is not that significant. It's a fairly small number of units increased. So we're talking, generally speaking, about a small number of multifamily units that were built during the bubble, and even fewer than that being built since the bubble burst, and we see that it's creating some issues. If you have any questions or comments about this analysis, or if there's another topic you'd like to see us cover, please email us at research at home-pride.com. You can also visit our website at ownerfinanceatlanta.com. And until next time, thanks for listening.